Good morning, ladies and gentlemen, and welcome to the MEDIAZEST final results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question in the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll receive an email notifying you when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give your attention, we'd be most grateful. And I'd now like to hand over to Jeff Robertson, CEO of MEDIAZEST. Good morning.
Good morning. So thank you for joining us, first and foremost. My name is Jeff Robertson, as Mark said. I'm the CEO at MEDIAZEST PLC. I'm going to talk this morning a little bit about the business for those who may not be familiar with what we do, and also a little bit about the financial results for the 18-month period to the 30th of September, which were just released a couple of weeks ago. So diving straight in, there are three of us on the board of directors: myself, Lance O'Neill, who's non-exec chairman, and a non-executive director, James Abdul. The business proposition for MEDIAZEST is that we deliver innovative turnkey audiovisual solutions to our clients, and we generate revenue in two ways. One of those is through projects, and that would be through hardware and software sales and installation and project management costs around that. And the second way is ongoing recurring revenue streams from service and maintenance contracts, content hosting, content management, things like that, based around those installations. So it's an ongoing stream of business. We work in three key sectors. So retail, where we typically work, with the evolution of customer experience, using technology as the enabler on that. In automotive, in new dealership business models, electric vehicles, and the increase in those is a really interesting area. Lots of frequently asked questions, lends itself to digital technology. So we're seeing a lot of interest in that area. And corporate offices, where we use audiovisual technology to enable our clients to manage their resources more efficiently. Our strategy has got sort of four pillars. Firstly, to try and improve business performance visibility and the value of the underlying business by focusing on long-term contractual revenues and clients that generate repeat business. That means focusing on clients with long-term opportunities to deploy solutions, typically across multiple sites, so retailer chains, dealerships. We have a very diversified client base in different sectors, and the common thread is innovation in audiovisual. We also collect data from those installations, and we use that to help provide actionable insights to our clients. So a good example of that would be a touchscreen kiosk in a retail store where the customers are encouraged to explore products or have their own journey. What we'll be able to do is give our clients data about how that's being used, whether it's been effective, whether we're getting the right messages across, and then they can change that model, how it works, to improve it so it maximizes the return on investment we deliver for them. So case studies and market opportunities, probably the best way to explain what we do and show people is to show some examples. So we'll dive straight into that. First of all, retail. So this is a good example of a client of ours, Pets at Home. We've been working with them for a couple of years. We provide audiovisual solutions to them as part of their store refresh program. This is the Stockport store. It recently won the large format store of the year at the last Retail Week Awards, which is great news. I'm really proud to be a small part of that. What we deliver for them is digital signage in their stores, and we've done about 20, I think, so far. What we do is that could be just wayfinding. It could be giving information about product services. It could be giving tactical offers to the customer, what's on offer this week. But also we give them an experiential element as well. So this is what they call the Pet Village, as it welcomes you as you come into the store. And you can see it's on a selfie spot. So there's the opportunity for customers to engage and just have a great experience. So it's all about making the store visit better for the customer, more enjoyable. Another good example, this is Ted Baker, we've worked with for many years. For Ted, that we deliver a sort of a standard digital signage network, we think of it as. So we're giving them the ability to push content to all the screens across all of their estate around the world from their headquarters here in London. And that means working with them across Europe, Middle East, Asia, Africa, Australasia, and North America. So for us, it's our most global client. It's a great, really strong brand. They've got really strong imagery and video. I spent a lot of time and money developing that around their clothes. What we give them is the ability to put that message in the right place at the right time and do that consistently across the world for all of their stores. In terms of the retail market, there's obviously a lot of talk in the press about, you know, how the high street's evolving, what's going to change. You know, I think that the COVID pandemic will obviously inevitably bring changes, but I think a lot of those changes have already been coming. Retail has been focusing on changing to a model of sort of fewer, better stores for many years now, and that's really as well about integrating the online internet platforms with the offline store experience and providing a sort of seamless experience for the customer when they go into the stores. This is a great example as well of the sort of the high street's not dead, I guess. Amazon recently launched their first Amazon Fresh store in the UK in Ealing Broadway. Just to be clear, it's not a client of ours, although we do some small audio works with Whole Foods, which they also own. But the point of showing that on the slide is really just to emphasize that the high street is evolving. Digital is a massive part of that, and it will continue to evolve. But even online retailers, you know, maybe the archetypal online retailer, you could argue, in Amazon, they're also looking at bricks and mortar. You know, bricks and mortar has a huge part to play and will continue to play on the high street. So the second area I talked about at the beginning was automotive, and that's been a really good market for us over the years. Since 2014, we did our first what I would call like a shopping centre store with Hyundai in Bluewater. This is one of our most recent. It's Porsche in City Life in Milan. This is all about putting the brand dealership in a space where there's lots of footfall, lots of traffic, lots of opportunity to people to walk by and get involved with the brand, to engage, to come in, to find out more, without them having to make a conscious effort to drive out to an out-of-town dealership, which is, you know, obviously the more traditional model in automotive retail. What it gives the customer is a chance to really just wander in and wander out. There's no high pressure sales. It puts, you know, the control of the journey in their hands. If they want to just browse, that's fine. And that's really something that wasn't part of the automotive market sort of 10 years ago. For Porsche, we did the LED video walls. You can see the big screens there, but also probably even more importantly, the smaller screens that you can see on the table. They're browsing screens that give the customer the ability to have their own journey, to look at what they're interested in, to be able to explore as they want to and at their own pace. So really it's about customer experience innovation, you know, giving the control back to the customer in the same way they would have it if they're sitting at home online, but with the added benefit of obviously being able to see the car and the brand in the flesh. The second example, just going to pick out from that market, is this is a traditional car dealership. This is Jardine Motors, Jaguar Land Rover in Reading. This was one of the first projects we did at the end of the first UK lockdown. I think really interesting to see. It's touchscreen, so no one's shying away from that. Obviously, they're taking extra precautions with the screens and with the wipes for their customer and their client, their colleague safety. But what this is really doing for them is it just shows the evolution is still towards adding digital technology. Again, it's putting the customer in control. They can come in and browse the range. They can build their own model. They can do it themselves. There's no high pressure sales, but also they've got the cars in front of them. They can get in and out. They can walk around the vehicle. They can experience it, you know, really feel immersed in the brand in a way that you can't do online. You know, that's where, you know, physical retail really has its role. This is, again, you know, combining the best of both. So the third sector that I mentioned was corporate offices. This is a recent example we did for Kuoni for their headquarters. And this is the sort of typical of a trend that we've been seeing with you know, meeting room solutions, whether that's room management, so booking the meeting room, whether it's video conferencing technology, so high quality audio so everyone in the room can hear, everyone in the room can see, etc. Also, there's the sort of rise of what we would term the sort of town hall meeting areas, and using audio visual for that. So display areas where people can present, we can get the whole team together, you know, and talk in the flesh, have meetings, have events, and so on and so forth. And AV plays obviously a big part in that. That market is obviously changing, and I think it's been changing for a while pre-COVID. But post-COVID, we believe we're going to see an acceleration of what we've been, the trends that have already been happening. So in particular, what we've been seeing in that market is people taking smaller offices, so smaller footprint, saving some costs, and moving more to a virtual model. That was happening before the pandemic. And obviously with lots of us at the moment working from home largely, that, you know, we believe is going to, you know, is obviously exploding, that whole area, and that's going to continue in the future. I think as we come out of lockdown, we're going to see a mix of people going back to the offices. I think people will welcome that, but they won't want to be there 5 days a week. So there'll be even greater emphasis on this sort of trend. We term it sort of bring your own meeting is the sort of the classic term. And that really means just being able to walk into any room with your laptop, plug it in, and have a really good experience with a meeting with your colleagues physically in the room, but also with your colleagues who may be virtually working at home. And obviously, you know, as I just said, with the COVID pandemic and how things are likely to evolve after it, that's becoming ever more important. It's also about maybe pitching remotely to clients. So maybe your clients aren't able to travel because of you know, safety matters and restrictions, just everyone wanting to keep each other safe. And that places even greater emphasis on the technology in these rooms to have a good experience for everybody, not just those ones sitting around the table in the physical space, but anyone joining from home or joining from another office. And that's leading to the ability to deliver, or the opportunity, I should say, to deliver some more advanced audiovisual solutions around, you know, audio quality, video quality. We looked at a product, we use a product called Barcode Click Share, which is demonstrated in the picture. And that's really interesting because that gives data as well behind it, which tells the office manager how often the room's being used, who's using it, what they're doing in it. So they can really help to maximize those resources. So obviously, as you get a smaller footprint, you know, more and more important to have the right tools to be able to do that. It also enables them to feed into things like the smart building technologies. So things like heating and light. So if the room's not in use, they can make sure that they're not using those services, which is obviously A, cost saving, but, you know, B, extremely importantly, you know, from a sustainability point of view and, you know, green buildings type point of view, you know, really, really important. We're also seeing in that area the town hall presentation sort of space is evolving. And what used to be a space to get everybody together physically is now also got to work, you know, remotely if people can't be in the office or only a certain number can be in the office. And that means that we've been adding the ability to record and stream live these meetings to staff. So there's been a real evolution in that as well. We see a real trend growing there. In terms of the market size and opportunities, we believe there's a significant opportunity to build a leading digital signage business here with international reach. The global AV market is believed to be worth around $240 billion in 2020, and it's expected to grow rapidly to $315 billion in the next 5 years. In our opinion, there are many relatively small skilled companies, particularly in the digital signage area, without sufficient access to capital or scale to meet this demand as it grows, particularly as it grows globally. And that gives us an opportunity to use our public listing to become a consolidator in the market, as well as to grow organically, which is, you know, our key focus at the moment. So that gives you a flavour of the business, hopefully, and what we do for those who maybe are less familiar with it, and some of the stuff that we've been doing recently in the last sort of 12 months, where we see the trends going. In terms of financial results, I'm going to talk a little bit about the numbers that we put out for 18 months to 30 September, which we recently released to the market. We extended the accounting period to 18 months as it would have fallen March 2020. Obviously, that was right in the middle of the initial lockdown, maximum time of uncertainty, I think, of what was going to happen and how things needed to change. We took the decision to extend the accounting period to 18 months to give us more space to be able to concentrate on, making sure the business was fit for purpose during that time. That enabled us as well to defer certain costs such as audit and push those back, which obviously made sense during that period. So in terms of performance, Obviously, last year, was very difficult for lots of people, and there was a resulting loss. I just point out, in looking at the numbers, just to remind us, there are different periods we're looking at here. So the revenue looks consistent, though obviously the most recent numbers are over a longer period. Conversely, administrative expenses, etc., look like they've gone up, but actually they've come down on a monthly basis because, again, it's because of the longer period. We had a very strong period of 12 months to 31st of March 19, and we were growing nicely as a business, and things were moving forward well, and various things obviously impacted last year, particularly COVID, that meant that we went to a loss-making situation. In order to really understand how the year shaped up for us, it's probably better to think of it in 3 separate periods, and we saw 3 really distinct changes in the market during the 18 months. As we look at it, so I've broken it down and broken it out here. This all obviously ties into the interim results and the second interim results we've previously released. What we saw in the first 6 months, so that's 1st of April 19 to the 30th September 19, was a real pause in demand because of Brexit negotiations. So, as you may remember, this was the time of the Theresa May government. There were several votes back and forward in sort of 3-4 weeks where it looked like there was going to be some certainty over how things would change in the sort of post-Brexit arrangements. And what we saw a lot from many clients, particularly in the retail market, was them deferring decisions and sort of putting things on what they call Brexit hold, because they believed that in the short term they would have more certainty over what they were going to see and therefore could make better investment decisions. That carried on until, I would say, roughly August that year, and then we started to see a realization that I think it was going to take longer to make those arrangements, and therefore our clients came and said, okay, actually we just need to get on with these investment decisions, we can't wait any longer. And that led to a really good period, that middle period, where we saw growth back to where we were, I think, before, and we started to really push on again. That period was really busy, lots of good client work, several new clients, but also growing with our existing clients. It would have looked even better, but obviously March, and to a certain extent for us February, because of the delay to the Porsche install, got hit. So actually it was still a small loss. That was really because we caught the beginning of COVID in that period. The period as a whole, though, was one of really good growth for us. And then finally, the final 6 months to the 30th September, obviously that included the biggest impact of COVID, certainly to date, and that was closures of the whole business and all of our client sites, April to May. Our recurring revenue streams really helped us during that period, and then by sort of June we were back on site. August we had a very busy month, and that period did make some recovery towards the end, but obviously there was a hit due to the COVID pandemic. In terms of just a couple of things to point out as well, there is a new IFRS accounting standard that came into play for this period for the first time for us. That's IFRS 16, and in brief terms, it meant that the lease we have on our main premises in Woking gets capitalised and added to the balance sheet, and the rent we would pay on that goes through the depreciation line rather than through administrative expenses. So that's why depreciation looks particularly high, sort of year on year. In terms of the balance sheet, excuse me. In terms of the balance sheet, it obviously is reflective of the loss, but also, as I mentioned, the IFRS assets that we now create on the balance sheet. So what you end up doing is you have an asset called a right of use asset for the lease, and then you put the liabilities of all the money that will go out in rent over the period on the other side of the balance sheet. So yes, you will see that in the accounts. Also, during the year, in terms of improving cash on the balance sheet, obviously there's a significant jump in cash at the period end. We raised £150,000 through convertible loan notes in August 2020. And we also took a bounce back loan of £50,000 from the subsidiaries bankers during the sort of similar period. That was to give us obviously more cash flow as we sort of navigated our way through the COVID period. What I think it's important to note, and it doesn't really sort of see from the sort of the numbers as you can look at them in summary, is that actually underlying those revenue figures, our top 25 clients accounted for over 80% of our turnover in both those accounting periods. So That's the last 30 months we've reported on. I think even more importantly, 17 of that 25 are consistently in that group in both periods. So we have regular clients that we've built and we continue to build, and often they're doing business with us on a repeat basis. So that could be store by store or dealership by dealership. That means that generally there isn't a large one-off deal that we can announce to the market. So we generally tend every quarter to try and wrap up and give a flavour of what deals have been done in summary. We also have the recurring revenue streams on top of that. At the moment, they're in the region of about £550,000 a year annualized value. Some of those are multi-year deals and some are shorter term. That number actually changes a fair bit at the moment because of COVID. So where there were stores closed, some of those we're not able to charge for even under the contract. But that will come back. So that number we expect to grow in the coming 12 months. In summary and outlook, we've already mentioned in our announcements this year several new business wins, and it is getting busier on the pitching side. What we are seeing, I think, is some pent-up demand. I think that's generally expected by most people in the business world. And what we're seeing is lots of interest in what we do, as people are hopeful of coming out of the pandemic in a relatively short space of time now, getting themselves ready for the second half of this year of 2021, and really thinking about re-engaging with these the projects they've already begun, or the projects that they've talked about and starting, getting those now moving. Now it's the more appropriate time. We're an award-winning audiovisual partner to lots of global brands. We've got several long-term clients, as I just mentioned, with long-term growth potential. Some of those have already begun those projects as a rollout. As we said, obviously last year there was a slowdown because of COVID and initially, with the Brexit uncertainty. But what we are seeing is the ambition to really carry on with those now, and that's our expectation moving forwards. The market in digital signage is really maturing, and that is going to open up opportunities in the coming years to consolidate, we believe. And finally, we believe we are well positioned to prosper post-COVID in all of the key markets we work. So with retail, they continue to focus on fewer, better stores, enhancing the digital experience, particularly with what the world's been through the last 12 months is more important than ever. With automotive, they're transitioning to digital buying models, but also the introduction of electric vehicle means customers coming and buying vehicles they maybe have some questions over. Technology has a great role to play in helping with that experience. And finally, in the corporate office space, using audiovisual technologies to manage that greater reliance on technology to help keep people safe and also to manage a smaller office footprint. Just as an appendix, this is all available on our website, but and in the accounts. Again, the website also has a link to the accounts. Key shareholder and director shareholders are all there. The AIM26 section covers all that, corporate governance policy and so forth. And shareholder loans and the convertible loan notes are broken down there as well. So hopefully that's enough for me to give a sort of brief introduction to the business and a little bit more colour around the recent results and what we've seen in the last 18 months. We believe there's a very exciting future for the business. We also are hoping, obviously, we come out of COVID very soon, and looks like that's going to be a very strong period for us, and the appetite to do digital in all of our markets is growing. Just want to say, thank you for your time, taking the time to listen to us, and I look forward to your questions.
That's brilliant, Jeff. Thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and we will send you an email to notify you when that's ready for you to review. I'd also like to remind you that feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Jeff, there have been a number of questions submitted throughout your presentation. I don't know if you can access the Q&A tab or you have it open already, but if you could just open the Q&A tab.
Sure.
Could I ask you, please, if possible, just to read out the question and give a response where it's appropriate to do so? And then what I'll do is I'll pick up from you at the end ahead of diverting investors to feedback. So if I may hand back to you, Jeff, that'd be great.
Sure, thank you. Just looking at the questions, thanks for these. So from Nick J, how is your business and revenue split between projects and recurring revenue stream? So the recurring revenue stream is around about 550 on an annualized basis as we stand today. That is impacted, as I said, by some of the closures at the moment and COVID, and the balance of the 3 million is project work. So project work is definitely the biggest. Our long-term ambition is to grow that recurring revenue stream so we cover costs sort of day one before we open the business and go beyond that. Second question, Simon C. What opportunities do you see for expansion into other sectors and services? I think it's constantly innovating the audiovisual market. We work very closely with suppliers on new products, so there's always stuff coming through that opens up sectors and services. I think the one area that we've really focused on recently, and I touched on it in the presentation in our strategy, is data. The importance of big data and the importance of using data to measure ROI, I think is really, really interesting at the moment. And what we're seeing that is a way to differentiate our business from other suppliers of digital signage. So we're not just going to put in a solution that's going to work and deliver what you want, but we'll evaluate that solution and we'll help you improve it, and we'll help you really generate return on investment from that. And I think that's a really compelling argument to our customers when we're pitching it, and we get really good feedback on that, really good interest. There's also a follow-up question from Simon. Would you look to organic or M&A to expand? I think at the moment, particularly coming out of COVID, we would look to organic growth, and that's really where we're focusing. That's in our control. So we're really working very hard on that. There's lots of engagement with customers, lots of new potential customers being spoken to as well. As we talked about in the accounts, the pipeline opportunities look strong. It's really going to be about how well we can close those, and obviously, to a certain extent, does the lockdown easing continue in the way that we expect? I think in terms of M&A, we do see in the future, we think there will be opportunities there. We're mindful of the share price, which we believe is, below where we think the market should be. We think we are undervalued, and that obviously, therefore we need to balance that up. If we are going to use M&A, we need to think about how we're going to fund that, whether it's debt or equity. But I think there will be opportunities. I think, unfortunately, for some people out of COVID, there will be opportunities possibly where there weren't before, where they'll be looking for partners, and we do keep a sharp eye on that, and we engage with the market to sort of see where that goes. But yeah, very much at the moment focusing on the organic growth, and we believe there's a really big opportunity there. Another question from Stephen. What is the cash balance as of today in the business? I think that's probably not something I can probably say in this forum. The cash balance obviously goes up and down, and depending on when clients pay and et cetera, et cetera. And we obviously, as a PLC, just to emphasize, we spend a lot of time in close contact with our Nomad, and they need to be obviously sure that we have sufficient cash in the business, for the foreseeable future. And we take that responsibility very seriously, and we continue to do so. Peter W, your offering appears to be quite bespoke. Is that correct? I think that's a really interesting question. So one of the ways we do differentiate ourselves, and we have in the past, is being able to deliver sort of these wow factor, like the Porsche example is a good one, sort of wow factor type experiences. What we've been trying to do and layering on, I think successfully in the last sort of 3-4 years, is think about the sort of more day-to-day digital signage. So I think the two examples I showed on the retail side, so Pets at Home and Ted Baker, where it is more digital signage network and it's at scale. That's really where we think the growth is, and the growth of the business. The one-off projects are great, and I think they're really good to attract new clients. What we tend to see is that the clients work with us on that. They tend to be pretty tricky projects, quite hard work. What we tend to find is that goes well, and that then opens up opportunity for us in the sort of wider parts of the business. So it's both. It's bespoke at the beginning, it tends to be, and then we tend to then widen the spread, and it tends to evolve over time. For a question from Ian, who do you compete with for new business, and what visibility do you have on projects going forwards? I think that's again a really good question. In terms of the market for digital signage, so what we would consider our real core business, and that's not just putting in screens, but putting the means to push content to those screens behind it, updating it, keeping that content fresh, sometimes doing the content ourselves, taking the data behind it and then reiterating the content to improve it. And there are very few companies that do that, and they tend to be similar size to us. I would say. So we tend to compete in the market with specialists. On some of the projects like the office fit out type projects, there are bigger players who just focus on that area. So we tend to compete with bigger companies. What we tend to find is the innovation sets us apart, I think, and the data side of it, I think, is part of that. But also the sort of, like I said, the Porsche example is a great one where we're doing something a bit different that isn't easy to do. It's not out of the box. The ability for us to be a one-stop shop, I think, for clients to deliver that from sort of blank piece of paper, what can we do here, to this is the solution, let's build it, let's test it, let's install it, and then let's roll it out. I think very few other companies can do that. You asked as well about visibility on projects going forward. That's a real challenge for us. For any of you who might work in retail or even automotive retail, things move very quickly and they get delayed very easily. So, negotiations with landlords, thinking about how the market is and when you want to launch stores, seasonality, that can all have a big effect. That makes it very difficult for us to predict exactly when projects are going to fall, and that's one of the reasons why we really focus on the recurring revenue streams and repeat business, where it can be a consistent revenue. So even if it's not contractual, if they're doing store after store after store with us, then we know that's over a period of time we're going to get regular business, and that's why that's so important, to give us visibility on projects, and obviously to help us manage the business and drive on to profitability again after a tough year last year. A question from VJ. What are your projections for 2021 results? We don't have a projection in the market. Partly that's because of the reasons I just talked about. Actually, it's extremely difficult to predict timing. What we are seeing, and we have talked about this in the accounts and in the recent announcements, is increased appetite for pitching. We do expect that, naturally to then lead to conversion. That level of conversion, it's obviously a little bit uncertain at the moment with the COVID situation, but I think the fact that we are getting so much engagement is really encouraging. And I would say as well, from our ongoing existing clients, they're all seeming to be gearing up to moving forward again. So again, that gives us a lot of confidence for the future. A question from Stephen again. What are the immediate risks and opportunities for business in the near term? So I guess immediate risks is COVID. If there's a knockback, if there's a new variant, if the vaccination has a problem or something, that's the immediate risk, I think. The opportunities in the near term, I believe, is that I think there's a lot of pent-up demand. I do think as well it's given management teams maybe time to think about what they need to do digitally. So it's very hard to drive a retail business and think strategically about how you're going to roll out digital signage and incorporate it in your business. We think we're good at helping our clients to do that, but it is a challenge, obviously. So I think having some time to be able to do that, hopefully in the coming immediate term, that will have opportunities for us as people have projects ready to go because they've had the time to prepare. Another question from Michael. Can you tell us the name of the client who was referenced in the recent RNS contract win? That's a good question, because it gives me an opportunity to address something. One of the challenges for us is obviously we want to put RNSs out and talk about client wins, but obviously we need to respect client confidentiality, and we very often sign confidentiality agreements before a project goes in. So that typically means we can't release the name of a client or talk about them until the project's been delivered and it's in the public domain. So that's the case with the client we mentioned. So it's a client with ongoing potential. We actually rolled it up. There were several pieces of business within the number that we announced. We will obviously try and talk about those clients as often as possible, but we need to wait for permission, and we generally need to wait for a successful implementation. The one we're talking about in question is due in the sort of beginning of summer. I believe they're on site now, so probably in the next 2-3 months we'll be able to talk about that. Question from VJ again. Can you talk us through how your pricing works on average? Excuse me, so we can get a typical view of a view of how much is recurring revenue in a typical deal. So that's another good question. So in terms of the hardware and software, hardware is difficult to make big margin on. Where we really make our money is around the services that we provide and the skill set we provide. That's why the core team is so important, and we've built that over the last 15 years, and that gives us a real edge, I think, over competitors. Typically, the recurring revenue element of a project will be around about 10% on average. So if it's a £100,000 project, then a service contract for a year will be about £10,000. That's a rough rule of thumb, it will depend on client to client. Also, obviously, from a repeat business point of view, that's even more important. It's even bigger part, I think, of our revenue base, which is the ability to keep working with clients as they do more and more stores. They like what they do, and then they've got the opportunity to refresh or invest in those stores. In terms of current pitches, so this is for Michael, what's the likelihood you'll win new clients in the short term? High, medium, low. Well, I would say sort of medium to high. You can never say with certainty, but there are plenty of pitches out there. Lots of clients we're in advanced discussions with. I would say, yeah, new business, as I talked about earlier, and we talked about in the accounts, has definitely picked up since January this year. You can see people gearing up to get back out there. So yeah, I would say medium to high, but it can never be certain. Does the business have the ability to be more digitally active on promoting itself on social media platforms where appropriate? That's from Stephen. Yes, yeah, that is the short answer to that. We'd like to do more. We're a relatively small team, so we're covering a lot of ground. There's a lot of complexity in what we do, and that means generally having the time to do the social media type posting is maybe something we could do a bit more of. So we would definitely like to do more of that and do a bit more marketing, something definitely we're looking at in 2021. So I think that brings us to pretty much all the questions. I'm just searching through. I think I've covered most of them.
No, Jeff, I think you have actually addressed most of the questions that have been submitted by investors. So thank you for the investors for submitting those, and Jeff for your time in dealing with them. If we have missed any, obviously we'll make those available to you post the meeting, Jeff, anyway. Obviously, feedback, I know that you want investors to provide feedback, so before I divert them to do so, perhaps I could just ask you for a few closing remarks, and then I'll take the floor back.
Brilliant. Yeah. Again, I think we see an exciting future for the business. We think all of the markets we work in, will be continuing the growth as we come out of the pandemic in the digital transformation arena, and that's where we are, super strong, and where we believe, we're one of the leading companies, certainly in the UK, delivering that. We see an increase in activity, and we think it's an exciting time as we come out of it. I think everyone's very much looking forward to trying to get back to business as usual, business as normal, but that new normal would include more digital, I think, in all of those areas that we talked about today. Hopefully it gives you a flavour of what we do. It's a very visual business, sort of, if you can see what we do, it sort of helps understand it, I think. It's I think for the future, it's if you're opening a retail store at the minute and you're not thinking of digital, I'd be very surprised. Same with automotive. And in terms of buildings, if you're not thinking about how the technology needs to work better for what's coming up, again, I'd be very surprised. So that gives us a lot of confidence for the future. Yeah, and just thank you very much for your time. Thank you for taking this time to listen to me and for the questions. That's great. Yeah, I look forward to answering more if there's any more we've missed.
Jeff, thank you very much indeed for your time today. Could I please ask investors not to close this session, as you will be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, the feedback page will appear. If you access this meeting via the link sent you by email, you'll simply be asked to log back in to submit your feedback. And if you could give your time, I'm sure it'd be greatly appreciated by the company. On behalf of the management team of MEDIAZEST, we'd like to thank you very much for attending today's presentation. That now concludes today's session. Good morning to you all.